Okay, welcome. Still looking at using the EMA exponential moving average, EMA 21 and EMA 50, keeping it short and sweet. One, you need the EMA 21 to cross above the EMA 50. I'm looking at the bullish or bias territory now. Okay, crossover. Okay, two, your entry. If you look at this very closely, let me use this crosshair. You will see that the crossover occurred on this bullish candle here, this particular bullish candle. So you place your buy on the open of the next candle with stop loss. Where will the stop loss be? The stop loss will be the closest support and resistance. The closest support and resistance after this candle is here, support, resistance. Okay, support, resistance. Now, to be on the safe side, your stop loss, you could place it at this bottom here. But for precision, conservative, you place your stop loss here at the closest support and resistance. Another part I could suggest that you try to place it, let it be at least below the EMA 50. For the buyer side, it should be below, not really above it, in case of some spike. If you place your buy entry on the open of the next candle, you hold the trade until there is another what? Crossover, where the EMA 21 breaches or crosses over the EMA 50. Immediately that occurs, you close your trade on the open of the next candle. As simple as that. Now let me repeat what we just said. One, you're looking simply for what? Where you have a crossover. Okay, here, this crossover corresponds with this bullish breakout candle. What do you do when you experience that breakout candle? Simple. When you experience that breakout candle, you take a buy on the open of the next candle, which is this bullish candle. Your stop loss should be on the safe side, which is the closest support and resistance, which is the closest zone. So it will be below the what? Market structure. That's what I'm trying to say. Your stop loss should be below the market structure, which is your closest demand zone, below. Now it must not be exactly here. You can give like 15 pips below the market structure. Okay, 15 pips below. You open the trade on the next candle. So point one is what? Crossover. That is for your entry. For your closure, you have to ensure that what happens once there is a crossover again, which the crossovers you check using, let me use the crosshair again. Using this crosshair, you discover that the crossover occurred here on this bullish candle. So what you're going to do is you carry your stop loss, which you have been trailing. You will keep it here now. So if this candle breaks this bullish candle, you are out. Okay. On the other hand, on this crossover, you could just close it before the open of the next candle, or on the open of the next candle after this candle closes. You could just close it. So this crossover is for your entry. For your exit is again a crossover. So simple crossover, entry on the open of the next candle. When you see a crossover again, close on the open of the next candle. As simple as ABC. This is brought to you by Phoenix Unique. I don't know how simple I can make this sound, but this is as simple as it can be. I'm going to add some other concepts for bullish trading using the EMA for buyer's territory.